Oh geez, someone stop him. Someone stop him. Don't let him use the buzzword. Ecosystem. Just roll the intro. Okay, so now that that's over, thank God it is, and my phone has updated to MIUI 12, which is the new Xiaomi operating system, which is how they started out as a company. I think it's a pretty cool time to revisit Xiaomi stock. Of course, I haven't actually made a video on them before, but it's a stock I've been following for a very long time. See, Xiaomi IPO'd late 2018, early 2019, and it was one of those stocks that I needed to get on. I had been following the company for so long and knew that their growth path was looking pretty nice. And essentially just had to bide my time. So it IPO'd in a time, as I said, end of 2018, early 2019, that wasn't great for IPOs in general. There weren't many really raising at the higher end of the target they had set for themselves. And Xiaomi set a target of 17 Hong Kong dollars to 22 Hong Kong dollars. And to this day, perhaps by the time I upload this later tonight, Australian time, or Hong Kong time as well, it might have crossed that elusive kind of debut price of 17 Hong Kong dollars. It's sitting around the 16 mark right now and has had a few good weeks. But again, yes, when it IPO'd, it was not a great time. Didn't do particularly well. And unfortunately for them, basically it debuted and fell off a cliff. It really did. And I was happy to get in back in August of 2019. So I'm up a decent amount right now. And I'm just going to try and use this video as a way to share with you guys my particular reasons for getting into this stock, and also to help you understand the narrative or the story behind the stock. So the main part of that, I can't talk about Xiaomi and their products and their, as I've said in that hilarious skit, their focus on ecosystem, all that sort of stuff. I can't really talk about all that without first explaining the fact that their business model is divisive amongst investors. Just as the way, for example, Square is divisive with having, and Twitter for that matter, is divisive for having one CEO against two companies. Like, that's pretty crazy to a lot of investors. Xiaomi's a bit different. Their actual business model tends to put people offside. And I mean, if you're a very traditional logical thinker and you're just looking at what's in front of you, it can seem very counterintuitive, and I can see that too. I can see how counterintuitive it must seem. And what exactly about the business model is counterintuitive? Well, Lei Jun, the founder, who started the company about 10, 11 years ago, so it's a very young company, agile company, basically said, we're happy to sell our phones, our hardware, at just about cost price, or a little bit above cost price, just to cover about 5% profits. That's the margin he really wants on his phones. Which, for a company that mainly sells phones and is recognized for selling phones such as the Mi 9, which is what I've got here, they're up to the Mi 10 right now. I mean, it can sound pretty horrible from an investor's point of view, but that's when I've got to come in and explain the business model to you guys. And this is kind of if you follow the bull thesis, because being realistic and being completely, I guess, everything out on the table, it isn't happening at this very second. But the founder and CEO has said Xiaomi isn't a hardware company, it's an internet company. An internet company, that's thrown around a lot, just as ecosystem, the word is thrown around a lot in investing circles and by particular CEOs here and there. So is there actual weight to that claim by Lei Jun? Well, we'll have a look at that. But the company itself, yeah, the hardware margins aren't huge, and so the business model relies on very low margins, sell as many units as possible, just bet triple down, quadruple down on volume, just get as many people with Xiaomi products in their homes, in their hands, wearables. They're in consumer electronics, appliances, even clothing. They have over 300 sub-brands or brands that they've invested in, so their whole ecosystem involves about over 300 companies at this point, with a book value of over 30 billion yuan. That's grown 11% year on year, which is insane. They, for example, have a stake in Ninebot, which you might know from kind of Segway, that sort of stuff. XGimi, which is a big projector company. Very cool tech, by the way. And yeah, really, they've just gone all out in this strategy to have as many people with their phones in their hands as possible. And the reason they call themselves an internet company is they're hoping to use that sheer mass, that critical mass that they're gaining in terms of just amount of people on their platforms, on their operating system, etc., etc. And they're hoping to monetize them with internet type revenue, such as advertising revenue. The internet services revenue has grown 38% year on year, and it now equates to 12% of their total revenue. So, I mean, you can say that the strategy is working, but it is a bit of a stretch to say that they are an internet services company right now. Considering that though, you can see what they're trying to do. I think that it's not too hard to get your head around everything they're doing, because they are involved in a lot of things. They've got fingers in many different pies at this point. They really do. The more you kind of Google this company, the more you research this company. They have investments in the Chinese YouTube, the Chinese Netflix. They have investments in even that video I made on NIO, the NIO stock video, which for some reason got so much attention. Well, actually, I know why, because the stock price is up like 70 or 80% at this point. Since posting, which is pretty cool. Be sure to leave a comment and subscribe and do all that fun stuff, by the way, because the conversation, the chat that we've been having on this channel has been phenomenal. Really appreciate it, everyone. But yes, the company seems to be in a lot of different areas. So in that NIO video, I did mention that Xiaomi has kind of joined forces a bit with Alibaba in trying to back XPeng Motors, which is NIO's big kind of local competitor in China, although there are quite a few EV names in China, but they've got the coolest kind of sedan looking car, basically. So yeah, the actual story here though, the actual story for Xiaomi and why I would suggest you take a look. For me, the reason that I was drawn in is the double-digit growth. So as of Q1, they've got total revenue up 13%, net profit up over 10% as well. That's despite the pandemic. Think about it, you know, they're a Chinese company. The bulk of their revenue comes from China itself, and China was, of course, the first country to, you know, go through it all with everything that happened earlier this year. And so for them to have a strong Q1 and still be growing year on year is phenomenal. Apart from that, the company itself at the end of Q1 grew its overseas revenue with a huge kind of jump to #1 in smartphone sales in Spain, which is pretty cool that they're actually moving to Western Europe now. So you can kind of get into that jump into that growth story as they're expanding to other countries for the first time, because they have in the past, but not really to Western Europe and I guess what you would call Western countries as much. They've definitely been really focused and zeroed in on India, where they've been #1 for a while. That could be changing now with a bit more competition from players such as Vivo and Oppo. But that's where their strategy for smartphones also comes in. So it's really interesting with a company like this. How does a company that's 10 years old, or approximately 10, 11 years old, manage to enter the Fortune 500, the list of the top 50 most innovative companies, as well as dictated by BCG, or Boston Consulting Group? I think they're number 24, or they were named number 24. How does a company so young do that? And that's where the strength lies. So Lei Jun and Xiaomi, they've basically done all this in such a small amount of time that they're still super agile to any kind of changes in the market. For example, they really started mainly as kind of an operating system community, or building operating systems on top of Android. They have this huge legion of followers, which is Me fans, which I would say I am one. And a lot of that comes from the fact that this company is dedicated to lower margins. People are happy to pay less, and as a result, they end up having a huge love for the company itself. It's a great way of building brand trust to be able to bring almost the same specs as a Samsung Galaxy phone, like a premium top-of-the-line Samsung Galaxy phone, with maybe one feature that might not be at the exact Samsung Galaxy level. So just as a quick guide, for example, this phone here that I bought last year, about this time last year, cost around about half, or a bit less than half, what a Samsung Galaxy would cost me just here at the shops in Australia. And I mean, I got a 48 megapixel camera, which was perfect for when I was going on exchange. They have an ability to bring in these Me fans because they are just with their prices. They're not trying to gouge people on that, and they're happy to get more money later from service revenue that sort of thing. And so that's where the company's headed, and hopefully that is the narrative that does play out. Of course, by being invested in this company, which, full disclosure, is not financial advice to say you should be, a lot of that is me betting on or banking on the fact that that strategy will continue, and the strategy of being able to keep expanding to Western countries will succeed as well. As a quick kind of guide, when I was in South America, I know I like to use these analogies or examples a lot, but that's basically where I've been the past year. Yeah, I was there and happened to be seeing a few developments from the Xiaomi Facebook page, and a lot of stores happened to be opening in Santiago de Chile, in the middle of Santiago, while I was there, and they had huge unveilings. And it was crazy to me because a lot of people were still talking about Huawei and all the dramas that Huawei had in the US. And so to see Xiaomi still be able to aggressively expand into so many countries was really impressive. And the fact that they haven't had as much of a blow to their brand name through the fact that they've got really, really loyal Mi fans. They have a cult following, really, and haven't really faced the brunt of criticism like Huawei, although they have had privacy issues, which is something that every user kind of has to take into account as well. And I mean, that's the basic story of the company. Now, again, the investing reasoning does come back to that ecosystem buzzword. It really does. So their Internet of Things, devices have reached 252 million. And that's a 42% growth year on year. And then the users of this operating system have grown 26% year on year, which is now up to 330 million people using their platform. So what does that mean? That all comes back to that internet services revenue I was telling you about. People are buying everything from their appliances, their fridges with a bloody TV screen in it, which, I mean, why you need that, I'm not sure, but it's pretty cool. I guess it's appealing to kind of young people that have just gotten their first house and really want it to be decked out, cool and modern. They've got everything you'd need, everything for a connected home. And ultimately that is their aim. They're hoping to be able to have you wake up, check your wearable Xiaomi product, and then speak to your Xiaomi equivalent of a Google Home or Alexa. And that's their general push forward, plus all their investment vehicles on the side. But again, Western Europe growth of 80% and top 4 in smartphone sales globally. It's really hard to kind of gauge the smartphone sales figures in terms of comparing them to, say, the competitors that are beating them right now, which is Apple, Samsung, and Huawei, because they all launch phones at different times. So if you look at it on a quarter by quarter basis, it can be quite difficult. You've kind of got to look at the yearly figures and try and amalgamate over when big launches happen. And then you've got to take into account kind of their product cycles and when, I guess you would say, a bigger change in hardware occurs. Because sometimes, for example, an iPhone from year to year will have no real change, but then the year following, it'll be a bigger change, if that makes sense, and there's actually more incentive to buy. But again, for a top 4 hardware smartphone maker trying to limit their margins, it's pretty ballsy of a move, I'll be honest. And this company can be frustrating to explain to a lot of people because of that. But once you look past that and see the fact that they're growing double-digit revenues right now, percentage-wise, and they have a market cap which actually leaves, for example, Tencent, which is more of an internet services company than they are, at 12.5 times the size of Xiaomi, they become an intriguing kind of company to look into. Because their PE, which I'm not a huge fan of just using the PE, of course, but I just like to use it to help introduce it to people. They're sitting basically perfectly between Alibaba and Tencent right now. Of course, Tencent's been on a tear lately. And that's if you want to look at them as a pure play internet services company, more so like Tencent and Alibaba, because although they have ecosystems as well, they're really heavily into the internet space. But that's the problem. This company is very difficult to compare. Even if you look at investment reports, which I do all the time through Morningstar, it's really difficult because this company is a hardware company still by the bulk of their revenues, as I've said, but they're moving to internet services, and that's what they want to be looked at as. And that's why investors were very thrown off and confused when they IPO'd. So how do you look at this company? I personally compare this company as a hybrid, essentially. I look at this company and compare it to Tencent's trajectory, compare it to Alibaba's general run, and then I also compare it to Samsung. That's the other way I look at it, even though Samsung's probably even more diversified than Xiaomi with all their electronics and that sort of thing. It's really, I guess, the hard part here. But I guess you can look at distinct aspects such as the ecosystem and then compare that to an Apple ecosystem or a Google ecosystem. And yeah, but on a company basis, it's very difficult to gauge Xiaomi, and for that reason, and for the reason that it's not listed directly on the NASDAQ, you have to go through the over-the-counter markets, which can feel a bit dodgy, I'm assuming, for any American viewers. Of course, I directly invest in them through the Hong Kong market, which is also a pain. You know, I had to kind of call up my bank and say, which is National Australia Bank, and then call their trading arm and say, you know, g'day mate, can you please switch me on to Hong Kong share trading, not just US. Had to pay a decent amount of brokerage fees to actually buy, so that's why my buy position was quite large, and it's my biggest position to this day, which was annoying. I wish I didn't have to pay brokerage, but it's the growth story that you're in this for. The growth story here looks very promising. So the growth numbers are great. They have very low debt. They essentially don't really market. Their marketing expense is quite small. I think it was about 5 to 7, or it went from 5 to 7 billion yuan, which sounds like a lot, but realistically for a company this size is not very big. Their debt's, very low. I'd highly suggest you look at the Q1 report or earnings statements, which basically lists very simply all the highlights. It talks about the fact that their dual-pronged strategy is, get hardware in people's hands and go for the internet services revenue, get everyone connected into the ecosystem. But what I like about this company is that they do everything that they need to keep the fans happy. Their forums are super active. They are very agile in terms of people's needs. For example, when the low-cost players in the Chinese smartphone game came in and started to take market share from them, and they had a horrible year, it was like 2 or 3 years ago, they completely switched on their strategy and they said, hey, we need to change things and be agile to compete. So let's open Xiaomi stores, which was never a plan of theirs. They always wanted to just be an online-only, low-margin company, and they kept the low margins, but they said, hey, let's open some stores. Let's get in people's faces. Let's really make people want to buy our product and make it really aspirational. And that flows into their newest strategy, which can be frustrating because, there's so much to look at here, but I'm doing my best to express it all. The Xiaomi line, basically, or Xiaomi itself said, hey, our smartphones, we've got an opportunity here to kind of tier them out. So they've decided that the Xiaomi brand is now going to be the premium brand in the market. They're going to have Redmi, which is a bit lower, or it's different. And then Poco Phone is another sub-brand of phone that they've got, which is their kind of entry-level, super amazing value for money play. If you're trying to get a new phone and it's not the exact premium features you'd want, that's what you'd go for. And that's what they've done, and it's been working well so far. They're actually getting smartphone sales across all their sub-lines that they've put out there. And it's so that they can kind of attack that premium market, especially if they're trying to enter Western countries. They can attack the premium market without their kind of budget phones detracting from that premium feel and look that they're going for. So the fact that they're no longer just the cheap alternative to everything in the phone market, or at least they still are the cheapest option, but it's not what they're solely known for. They're known for having an 108 megapixel camera. This one is a 48 megapixel, but I bought this again this time last year, which is pretty impressive for the time. The company itself is only 10 years old. There's a huge runway. I mean, this company hasn't existed for as long as Tencent has been listed on the stock exchange. So you've got a lot of people that have never even bothered to look at it, and I think that that's where opportunities really lie right now. If you go off just social trends and stock tweets, people are definitely jumping into this stock now and are realizing huge gains. I mean, it's been a brilliant week. I think we were up around 6 or 7% yesterday, and then around the same the day before. So unfortunately, the stock twits isn't as active as I'd like it to be, so definitely come and join us when you're checking out and Googling the company. It trades over the counter as XIACY or XIACF, I believe, or 1810 if you're looking in Hong Kong. And I'd just definitely love to hear your thoughts about the company. I mean, I've tried to give you the general story of the company, but again, that business model can be very hard to describe. It's at times like describing, I don't know, the color of this phone to someone who's never seen the color blue. It can be quite frustrating at times, just because even though these guys have the highest growth amongst all smartphone makers in the top 5, yeah, it's just difficult because you know that that's not where they want to be forever. They want to be in that space where your whole tech world revolves around them. And the way they do that is through their low costs. It makes sense to me, but again, if you're an investor that finds it super counterintuitive, hopefully you can kind of deep dive into all the numbers and the reports and find something that interests you. But again, my general thesis is definitely that there's nice growth, low debt. They're getting numbers out there in terms of bringing people in, and it's just about actually flipping that switch and monetizing everything that they've got out there. So hopefully this has made sense. I'm hoping you guys can comment below. I can understand if it's not super clear because again, the company can be quite convoluted, but if you leave comments below, I'll be happy to answer. Go through the ecosystem website. I almost forgot to say that. Go through the ecosystem website that they've got on their actual investor page. I can link it in the description below if you'd like, where they list all the kind of main companies that they've got under their umbrella and all the companies that kind of talk to them, their equivalent of like a Siri or Alexa, because it's really impressive. There's so much more in there than you'd expect. There's also companies that I've wanted to be invested in, and then I find out that Xiaomi's already heavily invested in them, and so I go, okay, I mean, great, I don't have to go out of my way to invest in kind of a small, potentially risky Chinese company when I can have this conglomerate that takes care of it on its own, if that makes sense. You know, I don't have to specifically invest in individual little startups here and there when they're doing it for me, because I like to keep my finger on the pulse with regards to Chinese up-and-coming companies. And I mean, these guys are obviously a lot better at that than I am, so when they invest in a company that I've been watching, it validates that for me, and it also gives me the satisfaction of knowing that I own essentially a bit of a company that is ready for huge growth as well. So again, go through the ecosystem page and you can see all the presentations by those specific companies in their umbrella that I think are worth checking out, and you can understand their growth path. But definitely worth a look. And thank you very much for watching. I hope you guys can subscribe, comment, like the video, all that sort of stuff. I keep doing these actions. Let's stop that for now. And yeah, every 10 subscribers, maybe I'll do another skit in a video, if you can call that a skit. Cheers, guys.